September isn't just another month for crypto, it's the breaking point. With the Fed, global liquidity, and whales all lining up, the next few weeks could decide whether Bitcoin crashes or Ethereum explodes to new highs. Think about it, Bitcoin is hovering just under its highs, Ethereum has already broken into price discovery, and Solana is gearing up for its next big run. At the same time, Wall Street is buzzing about rate cuts, and traders everywhere are trying to front-run what could be the most important decision of the year. This is not just hype, this is the moment where global liquidity, macro policy, and crypto cycles collide. And history shows that whenever these forces align, markets never stay the same. So if history really is about to repeat, what exactly does that mean for September? And more importantly, who's going to profit, and who's going to get crushed? For months, the global liquidity index has been grinding lower, putting pressure on risk assets. But that trend is now on the verge of flipping. Every time liquidity turned higher in the past, Bitcoin followed within weeks, and altcoins multiplied those gains. Now, with the Federal Reserve signaling its intention to cut rates, the entire market is bracing for impact. When the Fed adds liquidity, the dollar weakens, money flows into risk, and crypto is often the biggest winner. That's exactly why investors are watching September so closely, because this is the window where macro meets momentum. Here's the catch, liquidity isn't the only signal flashing green. On-chain data is already hinting at a much bigger move, and it could catch most traders completely off guard. If you look back at previous cycles, the timing is uncanny. In 2017 and 2021, major corrections and rallies lined up with liquidity shifts almost to the month. Right now, we're seeing the same setup. Whales are moving, hundreds of thousands of Ethereum have left exchanges in recent weeks, the kind of accumulation that usually signals confidence from big players. Short sellers are getting liquidated, charts are heating up, and the pattern is familiar, range-bound action, a breakout, and then a parabolic phase that leaves latecomers behind. And here's what makes this different, what's happening with Ethereum right now doesn't look like a normal breakout. It looks like the early stages of something much bigger. Ethereum isn't just along for the ride, it's leading. After years of doubt, failed ETF approvals, and brutal drawdowns, ETH has broken into fresh highs again. But this time, the backdrop is different. Institutions are not only buying, they're staking and holding. Corporate treasuries have started adding Ethereum to their balance sheets, reducing circulating supply even further. And with smart contracts powering stablecoins, tokenized assets, and even early central bank experiments, ETH isn't just a speculative trade anymore. It's becoming infrastructure. That's why inflows are rising, why whales are accumulating, and why Ethereum feels like it has unfinished business this cycle. Which raises a huge question. If ETH really is becoming the backbone of global finance, what does that mean for Bitcoin's dominance? Could we be closer to a flipping moment than anyone expects? This is where the market stands at a crossroads. On one side, Bitcoin is still holding close to its highs, ETH is blasting into new territory, and Solana is gearing up with ETF speculation on the horizon. On the other side, sentiment is heating up, traders are piling in, and history tells us that markets punish obvious consensus. September could be the month that flips the script. If the Fed cuts too little, liquidity might stall and crypto could correct sharply. If they cut aggressively, we could see one last surge into euphoric territory. Either way, this is the decision zone, the breaking point. And that brings us to the key moment, the price outlook. Because if this countdown plays out, Ethereum's next move could shock even the most bullish traders. Before we dive into that outlook, let me be clear, none of this is financial advice. It's about understanding the data, the cycles, and the psychology driving the market. Always make your own decisions. So where does this leave us? Based on historical cycles, on-chain flows, and the macro setup, the stage is set for Ethereum to push higher. A cautious scenario has ETH stalling just under $5,000 before a correction. But the bullish scenario, the one that traders are whispering about, sees Ethereum breaking above $6,000 in the coming months. Not in a straight line, of course. There will be volatility, fakeouts, and corrections along the way. But the bigger picture is clear, liquidity is returning, whales are accumulating, and Ethereum is once again the focal point of the cycle. If the Fed delivers and global liquidity expands, ETH has the potential to shock everyone with just how high it can go. So here's the bottom line, whether you believe ETH stalls at 5K or rockets to 6K, the countdown has already started, and missing it could mean missing the entire move. So let me ask you, is September the month crypto finally breaks wide open, or are we staring down a trap that wipes out over-leveraged traders once again? Drop your thoughts in the comments, I'll be reading them all. And if you want to stay ahead of the countdown, hit subscribe right now, because the next few weeks could define the future of Bitcoin, Ethereum, and the entire crypto market.